GM. Daily levels. Today is, what is it? It was Wednesday, 1st of May. So the first day of the month, and we're starting off with a nice dump to begin the month. Basically down only right away. So, firstly, this is a legitimate show of weakness, a legitimate breakdown. This is not something to fade and say, oh, it's nothing, it's going to turn back, it's going to do this, No, this is legitimate weakness. As I've talked about, since the 13th of April, the market has shifted to not being bullish anymore. The bullish trend ended over there with that break, with the daily bands losing the 50. We then had a bounce into the bands, the bounce failed. You've seen this on all my videos for the past couple of weeks. And 60k was the last level of support, and 60k has been broken. Now is going to be the unwind of many positions. And this now becomes, from we first touched the all-time high, right, that's where the selling began. This now becomes a 56 day, so basically a 2-month or 8-week distribution. That's what it is. Currently, as we stand right now, this is distribution. Now, does it remain that way? Do we end up reclaiming? Those are all what ifs. But what I do know is that you don't fade breakouts of such lengthy ranges, lengthy consolidations. So when you set 2 months, especially after a major run like this, okay, this is no different to any of these moves over here where they broke. Now this one was longer. This one took about 3 months to form. And once the bottom level of it was broken over here, it produced a significant move lower into an entirely new range, and then it had to reaccumulate before going back up. Over here, this was shorter. This one started on the 15th of October and it broke on the 18th of November, so this was just a month. And yet still, when that level broke after the distribution at the top, price weakened off and went lower, and significantly lower. Same on the downside, right? When you have these significant reaccumulations, this was 9 months. This is a 9-month bottoming range. When price broke out above it, that was it. It broke out, it continued higher into a new range. The only way to look at this as a price action trader is that Bitcoin is moving into a new range. Right? It's moving into a new range. It has to find its level there and then go up from that. Now, too many people assume that up is the definite direction here, as if almost nothing else can happen. And as I've observed over the years, most people will be directionally correct if they just keep saying it's bullish. If you just keep saying it's going to go up, all you have to do is be right that it's a bull market, which, given all the factors that we have and the future liquidity conditions improving, because the liquidity conditions are bad at the moment, given all those factors, eventually, I'm sure we go higher. I'm sure the buyers will step in. I'm sure Bitcoin goes above 75k. I'm sure all that happens, right? But that's not how you trade. This is the same level of cope that had people completely in complacency here when I was saying there's nothing bullish about this. It's not bullish on this time frame. And you can simultaneously be bullish for the next year and not be bullish for the next few months. And that's been my case, and it's exactly the same. And I think we're getting to a point where some of these alts, like Render was one I was looking at and showing you with the Wall Street cheat sheet on it as well. Like, this doesn't look, it's not done yet, really, in my opinion. It seems like it's going to get worse. If it's not going to get worse, then it first has to really show that this can be support, which is only going to come with a trend shift, right, a break above, and then a hold, and then it can go up. But even that seems unlikely compared to what's more likely, which is just that this stuff bleeds to new lows and then bottoms out there, right? And retraces probably the full move that we've had, and then has to go sideways. Like, the sideways phase is unavoidable. Once the whole rally unwinds, this kind of sideways, down into the lows, then grind sideways, reaccumulation phase, it's inevitable. And with Bitcoin breaking that 60k, it sets up all your meme coins that were in the same position to do the exact same thing. I mentioned this about how Pepe looked like Fetch from back last year. If you, I don't know what video it was on. It was probably on one of my videos last week, a trade of the day or something. But you can see it. That first bounce, bands go green. It's coming back down below them. Now it comes to probably new lows, if not just back to the lows again. I see it very unlikely that it just reverses from there. Here you go. Here's the paths it could take. There's one bullish path it could take. It didn't take that first path, right? And I think more likely it follows the red path, where it eventually grinds its way back down, at least towards the lows or equal lows. But today is not the day to be taking any big decision, especially not before FOMC. So today we've got FOMC and the Treasury, the US Treasury, the funding announcement, QRA. And I think you want to wait for both of those to see what Powell is saying about monetary policy and what Yellen is saying about the US fiscal. Because I mentioned this yesterday, like this got really, I feel like it got overlooked. This is super bad for Bitcoin. If this is true, it's really bad for Bitcoin. This is the Treasury Secretary, the person who controls the US bank account essentially, saying we need to reduce the budget deficit. It's her that's created it. It's the Treasury that allows that to happen. And make no mistake, the only reason Bitcoin goes up so much is because of reckless spending by all the fiat governments. Right? The central banks and the governments spend money like crazy, stupid deficits, print. Bitcoin goes up a lot, and then so does crypto. If they suddenly start becoming responsible, I talked about this last week, this is the single biggest risk to crypto. Nothing is a bigger risk than if all the governments and central banks start to say, wait a minute, maybe we shouldn't just print money like crazy, maybe we should be more responsible. Crypto will tank. People really don't expect this. That's probably the true black swan. And the reason why people don't expect it is because it's super unlikely to happen. Like it's really unlikely to happen. Because it's like saying that they're all going to become responsible again. Right? Which is obviously ludicrous because they've printed so much. They print their way out of try and print their way out of problems. And anytime some issue comes along, they just print again. But that can't go on forever. Like everyone knows there's an end game. The question is just when. Like eventually they have to stop. They have to say, well, we have too much debt. It's too high. We can't even service it. We're going to have to do whatever. Generally it leads to some kind of austerity. And austerity is where you essentially tell people that things are going to be tough. There's going to be less government spending. Taxes are going to rise. And you're basically not going to have it easy anymore. You're going to go into hard mode. And people aren't, obviously that's never popular. People don't want that. But that's probably that's definitely where we're heading eventually. It's either that or they have to just forgive all the debts. It's called the debt jubilee, which they'll probably try. I would say that they'll probably try that as well because it's politically easier for them to just forgive everyone's debts and say, oh, well, sorry, we fucked up. Let's go again. That has happened before. I believe it happened in ancient Rome. But anyway, that's a side point. Every single fiat currency eventually fails, right? Question is when, not if. And, once you get to the point where everyone's a liquidity expert and everyone's so convinced that they can just put their entire net worth into meme coins because, don't worry, like the Fed will print again, the Treasury will print, the deficit is out of control, there's nothing they can do, it absolutely can't go any other way than just endless printing forever. Like, that's not true. That's not true. After the 2008 crisis, most of Europe was in austerity. America didn't. America printed the way out of it. But I live in Europe. Most of Europe went into austerity. UK especially did it. But basically most of Europe. And that just meant things were really bad. Right? You couldn't get loans. You couldn't get a mortgage. You couldn't get access to cheap debt. It was the just take the polar opposite of what we see now. Right? 2020, COVID, print money, hand money out to people, cheap debt, buy a house, easy, get a mortgage, easy, get a loan for your business, easy, get a loan with don't even have to prove who you are, how much money you make, easy, emergency loans, easy. Just imagine the complete polar opposite of that. That's austerity. And people, I mean, I don't know. I don't know if they're factoring this in because it does seem so unlikely. Because people have gotten so used to the markets only going up and printing only increasing. Like, I am keeping a very close eye on this. Very close eye. Again, I don't think it's likely. I think it's unlikely. I think it's most probably just her talking, trying to sound responsible, trying to tame the markets, right? Because inflation's rising, yields are rising. The markets really is thinking that the Treasury are going to run down the TGA, the Fed are going to eventually cut rates and start printing. And because inflation is ticking up again, the markets are looking at this and saying, well, everything's going to go crazy. If inflation keeps going up and they print more money, we're just going to have hyperinflation, right? Eventually. That doesn't happen right away, but eventually. That's where it will go. If inflation keeps going up and they keep printing money, like how can you not end up with hyperinflation? Printing money exacerbates inflation. So probably it's just political speak. But I really do get uneasy when I see people, like Bitcoiners are like this, but they've always been like this. And then, crypto people are like this. I do get uneasy whenever everybody is just in complete agreement that there's nothing they can do except print. And again, I do think that when it comes down to it, they will probably choose to print more than to actually take the hard road and tell people that they're going to have to be more poor, and that they're going to have to struggle, and they're going to lose their job, and there's not going to be any support. That seems almost impossible to do in an election year. But again, the fear of it is probably enough. And I think that's what Yellen is doing here. Like, the markets need to come down a bit. Because if the markets keep running hot, and I'm talking stock market here, they don't give a shit about crypto. Stock market, it needs to pull back a bit. Because if it keeps running higher, then the rich get richer, the companies are making more money, their share price is up. That's inflationary. And they're trying to get inflation under control before the election. Right? They've gotten it down from 9% to 3%, obviously made up numbers that they fucking bullshit about, but that's what they say, so that's what it is. And the market itself, if the market comes down, people feel less rich and they take a bit less risk. Now, it doesn't have to crash to zero, but this is what the Fed do all the time, and maybe Yellen's doing the same thing. Just trying to talk the markets down, trying to talk people into a bit more of a sensible mindset, not fucking aping into everything. Could be. There's a whole host of things. This factors into the bond markets, the stock market, etc. But the biggest thing you need to look for in crypto is what are the governments and the central banks doing across the world with regards to liquidity. Not just is liquidity rising, but what is their actual path? So the reason why we went up since November 2022 all the way until now is because even though the Fed were doing QT, which is quantitative tightening, which is the opposite of money printing, it's where they're actually reducing liquidity, right? So everyone is like, oh, that's bad for markets. But then when you look into other avenues, money was flowing in, liquidity was flowing back in. So yes, on paper, they're removing 80 billion, I think it's 60 or 80 billion of liquidity from the system per month. But there's way more than that flowing in from other areas, like the reverse repo, the TGA, all these other Fed and Treasury tools. So if they actually stop providing liquidity to the market, right? Not just saying we're going to do it on one side, but then doing it on the other. That is extremely bearish for these risky assets. There is no other way around. And you can also see this. It's quite interesting that throughout all of this, gold has started to pull back because people look at crypto, right? Bitcoin is like a leverage bet, right? Bitcoin is people think it's a tech stock and it's a liquidity only. It's not like a defensive stock. It's not, or not like a defensive asset. It's not like a real store of value, right? I understand the logic. People say that Bitcoin's just like the NASDAQ. I get it. Other people say it's just like gold. I get that too. The reality is Bitcoin is its own thing and it's somewhere in between the two. But gold is pulling back as well. Given that there's heightened geopolitical tensions, gold should be going up. Now, gold has gone up. Maybe this is just a pullback before higher. But gold is also a direct competitor to the dollar in terms of purchasing power, right? You don't use gold every day, but if you feel very low confidence in the dollar or the euro or the yen or the pound, the original way to do it, not Bitcoin, it's gold, right? You want to hedge against currency debasement with gold. So in a really simple sense, if gold is dropping, it's the market telling you that they're not expecting as much currency debasement. Now, like I said, this is already up significantly. It's just broken out of a major range. But it is interesting that gold has started to show some weakness around the same time that Yellen starts talking about maybe being more responsible. I think that's the most interesting thing that's going on at the moment. So it'll be interesting to see what happens today with the Fed meeting and with the Treasury refunding QRA announcement. So we'll see. I'm traveling today. I think I should be back at my place just in time to watch the Fed meeting, so I'll just do the streams then. Ask Michael plus Wipeout Wednesday. And until then, GM. See you all later.